And welcome, it's Ellen McGonagle here with your Friday afternoon MEM Edge show. And as always, this is the show where we bring you where the action is in the broader markets. And not a whole lot of action on the surface, but there was beneath the surface, as always, a couple of areas that are continuing to bubble up. I will share that with you. Also going to share with you a little bit by way of my outlook going into 2024. We'll talk about historical precedent and what we can anticipate going into next year. First up, we'll take a look at nominal news this week, but there is news next week that you will want to be aware of. Last week, we did see interest rates continue to inch lower. That is great news. Also, we did see the S&P 500 hover around record level highs, almost joining the Dow. And weekly jobless claims came out, and they were a little bit higher, nothing too extraordinary there. Also, going into next week, we do get December's employment data, and this can and has been market moving, even though the markets and certainly the Federal Reserve has hinted at the very least pausing their rate hike campaign. There is still going to be, I believe, some volatility centered around those more impactful numbers. So be on the lookout for employment data. Also on Wednesday next week, the FOMC notes from the Federal Reserve's latest meeting will be released as well. And in my mind, that's going to be very telling as far as not only what is represented or what type of data we get, but also how the markets respond. So from here, let's go ahead and take a look at how we closed for the week and take a look at some of those areas that are bubbling up. And here we are with a daily price chart of the S&P 500. It did end mostly flat. You can see that we had very tight trading range for the week. We were able to close today on Friday in the upper reaches of the trading range for the day. Generally good news, but overall volume was light during this holiday shortened period as we head into the new year. Net, we do still have a positive RSI and positive stochastics, with the S&P 500 continuing to find support at a generally upward trending 10-day simple moving average. Net, we are still in a confirmed uptrend with the S&P. Let's go ahead and take a look at the underlying sectors within the S&P 500. Again, as always, we are looking at a 2-month daily chart view, and it is sorted by relative strength. And a couple of factors that we can see here up in the forefront: industrials are continuing to remain at this forefront level despite underperformance this week. Actually, they did outperform this week, but overall staying up here in the forefront. As we move through, you'll also want to note that financials traded above the broader markets this week as well. A lot of that shaping up due to increased confidence in the markets, which is helping select areas in the financial space. You can read my article on StockCharts here from last week. And of course, subscribers to my MEM Edge report will be well versed on why financials are exhibiting outperformance. Moving along, real estate also up here at the forefront. It did suffer a little bit today, another beneficiary of lower interest rates with these REIT stocks trending higher. And then some newer areas up here. First up is healthcare, XLV. In the next segment, I will share with you one of the reasons why healthcare is trending higher. Also, technology. Let's go ahead and move through because I want to share with you the fact that energy did falter, certainly into the close for the week. The price of oil was down 3% for the week. And what I did want to point out, and this is a question I get in my live trading rooms a lot, when we did experience this rally in the beginning of into late December, there was anticipation that energy names were in fact reversing. And they have now pulled back to the point where that RSI is just dipping into negative territory. It was not a downtrend reversal that I have embraced. I don't believe the dynamics are there at this point in time for energy, but I did want to point out to you that that downtrend reversal, for those who are paying close attention, is in fact faltering. So moving along, we want to take a look behind the scenes beneath these sectors, because again, last week overall felt as if we had a flat week. But again, beneath that, there certainly was activity that took shape. So let's take a look at some of these groups up here at the forefront. HB is housing. Housing stocks did end the week flat. However, there was outperformance beneath the surface, primarily home builders that cater to first-time home buyers. And that has everything to do with the fact that interest rates are declining, as are mortgage rates, but there also is data showing that rentals are decelerating, so that there is thinking, or certainly thought, that these individuals that are no longer renting are entering into their first homes. Moving along, IHI is the healthcare device, and this is one of the reasons that healthcare is on the potential move higher. We can see this trendward higher with the medical devices ETF up over 0.5% for the week, but a nice continuation rally shaping up in that area. Also taking a look at another area in healthcare is IBB. Now it did pull back today, but net among these sub-industry groupings, biotech stocks were the top performer, up 1.6%. And I will share with you a couple of names in the biotech space that I feel you should be aware of. They are looking quite constructive. Moving along, we did talk about interest rates, and you can see that for the most part for the week, we did probably end closer to flat than not. But that downtrend does, at this particular time, continue to take shape here with that yield on the 10-year Treasury. Another area that has been on the move of late is small cap stocks. Now, they did pull back quite a bit today, about 1.5%, but finding support at that upward trending 10-day simple moving average. I'm going to keep my eye on this MACD. Any crossover could, in fact, indicate, at the very least, a pause, primarily because we did see pretty decent volume on today's pullback in the small cap stocks. Now, from here, let's go ahead and take a look at stocks in some of these areas. Actually, I want to make sure that I mentioned to you another outperformer this week, Semiconductors SOXX, up over 1% for the week, pulling back very orderly to this 10-day moving average. So we did have two areas in these subgroupings that did outperform the broader market's generally flat performance for the week. Let's take a look at a couple of names in that biotech area that are helping propel that group higher. And first up here is a well-known biotech name, Vertex, VRTX. And what I wanted to point out is this big gap up. Now, this was a very big one-day price move for Vertex back here in mid-December, all about good news regarding underlying product development. And we can see subsequent to that Vertex, by and large, has been marking time and digesting this significant move higher. Of note was the very high volume on that rally day. We can take a look at other names that have experienced, going back in time, having large one-day rallies, such as CrowdStrike from my MEM Edge report back here at the beginning of December, a big gap up on earnings, a period of consolidation before entering an uptrend. You want to have historical precedence in mind. This chart is not quite as orderly looking, but Vertex certainly one for the watch list. Another name that is smaller, but in that biotech space, is APGE. We can see this nice uptrend taking shape here, and a pullback coming out of that overbought position. Ideally, another pullback further would make this name a bit more attractive. Other areas I talked about that are on the move higher is small cap stocks. We looked at Russell 2000. Let's take a look at some of these smaller names that are in technology. I'll share a couple of names here with you. This is JFrog, FROG, gap up, big volume the prior week on earnings. And here we have very tight back and fill formation as the stock digests that big move. Another name for the watch list. We'll see how it develops beyond that. FRSH is another software. This is a stock also that experienced a gap up on earnings into a base breakout. What we are seeing are a number of stocks post earnings that are exhibiting these very tight back and fill trading ranges. Now, how it does sort out, of course, remains to be seen. You will want to keep an eye on this MACD, but most importantly for me is going to be that RSI. If we can stay up in positive territory, continue with that back and fill formation, we should fare well. From here, I'm going to share with you larger names that have had lengthier back and fill formations. And the reason I'm highlighting these is because oftentimes, and it will have everything to do with the market environment as well as the given group that the stock is a part of. But this is WDAY, big gap up, and it takes time to digest this significant move post earnings on volume. So oftentimes you will see this back and fill, very tight trading, and on the lookout at some point in time for a break above that high with WDAY that would to be at 280 on volume, get that MACD black line up through the red, and you are set up for another leg up. A couple of other names that are exhibiting lengthy, tight trading ranges. Datadog is another, DDOG, and you can see this back and fill almost 2 weeks. Another last name that we can take a quick look at here is e.l.f., this back and fill formation that has been shaping up, keeping an eye on that to see how it does resolve. And actually, I do have a few more names that I did want to share with you. I mentioned to you that industrial stocks have remained at the forefront with this sector continuing to outpace. And from here, I am going to share with you one area that is continuing to fare well, and it is in light of the move into housing related stocks. So first up is a company, and these are going to be for the most part smaller cap names. That's where the vibrancy is coming through over this last 2 weeks. And first up here is a name that's been on the move, no doubt. It is Sterling Infrastructure, STRL. But what I did want to point out to you with this particular name, and when you do see stocks begin to advance, you will want to add this 5-day simple moving average. As long as we continue to find support at that upward trending 5-day simple moving average, you can stay with the stock. From here, let's go ahead and take a look at some of these other building related names. Next up is OSH. OSK actually is the proper ticker symbol. And what I did want to point out to you with this particular name, Oshkosh, is we did have this gap up into a back and fill formation and then an upward trending move as it finds support at that upward trending 10-day simple moving average. A larger, well-known building related stock, of course, is Caterpillar. And this particular stock also very recently experienced a lengthy base breakout. We can mark this up very quickly here, and you will see that we had that base breakout. Now, again, last week's volume was relatively light, but on this particular advance last week, we did get decent volume. So I have this on my watch list as well. And another large cap name that we can take a look at that has been attempting to reverse its downtrend, but is more successful, certainly here recently. I'm going to pull up a longer term daily chart here. This is 3M, and you can see that we've had 2 prior downtrend reversal attempts this year, but this particular move that began in the beginning of December does have legs. You can see that we're finding support, upward trending moving averages, and looking quite constructive there. From here, we can pivot over to other home building related names. Trex is a provider of decking and materials, and we can see that this is another name that had a nice lengthy base breakout into an uptrend. And then also the estimates for earnings for 2024 are continuing to be revised upward for TREX. BLDR Builder is another building materials related stock that just recently experienced a gap up into a base breakout and then a nice continuation rally. TPX is it's not really housing building related, but certainly new home related, and that is Tempur-Pedic, the mattress company. And we can see this is another company that or stock that experienced this gap up into a back and fill base formation, which we'll be on the lookout for to see can we advance higher, but it does look constructive. WMS is building materials, drainage, and I think you can see a similarity here where I'm on the lookout for those names that have gapped up on bullish news and then had a nice continuation rally. Last up, Aaon is a company also in that building material in industrials that experienced a gap up into a base breakout and then into a nice uptrend. So from here, I did want to take a moment and talk about the broader markets. How did we end for the year? Of course, we had a very significant advance, certainly in the S&P 500, those indexes that are heavily weighted in the Magnificent Seven stocks. So as we move into next year, I will share with you some charts for your review so that we can be on the lookout for what may shape up. I talked about it just a little in the sense that I anticipate that we will see volatility remain, not to the extent that we saw last year. I can share with you the S&P 500 on the daily chart, and you will see that we had fits and starts with the broader markets, entering uptrends, faltering up and down, all about interest rates. As interest rates were on the rise, we would see the markets pull back. Now, much of that interest rate uncertainty is behind us, but now we have new potential fears by way of will we see a recession or not? And most of that could very easily be resolved as Q4 earnings begin to be released. And that will be the second week of January earnings season. And not only will Q4 numbers be in the spotlight, but also management's outlook within those companies for growth going forward. So let's take a look here at the S&P 500 monthly chart. I did share this with you earlier, but it bears repeating. And we are looking at the S&P again on that monthly, but this is a 6-month moving average, simple moving average that is very helpful when you are looking at these longer term charts. What I did want to point out to you is the fact that despite this general uptrending period for 2023, it's only been very recently that we've had a more pronounced uptrend enter, and by way of a black line up through the red, MACD crossover, and the RSI very decisively trending upward. And of note as well is the fact that we are relatively early in the advance for these momentum indicators on the monthly chart. Historically, that bodes very well for the fact that we could easily be in the very beginning stages of a more pronounced upside. From here, I'm going to share with you a couple of sectors that are very compelling looking. First up is XLC. Now, of course, we're aware of the heavyweight names in communication services is Alphabet, Google, and also Netflix and Meta platforms. However, if we take a look at XLC, we can see that this particular sector is even earlier in its upside advance, with the MACD just entering into a more positive period or area here on the MACD, and then also that RSI trending upward. And historically, of course, you want to focus on those areas that have a history of trending and outperforming the broader markets. From here, I did also want to share with you another monthly chart, and that is XLY, Consumer Discretionary. Also very much in the early stages of an advance on that MACD black line up through the red, with the group only over the last 2 months coming back into favor. From here, I did want to share with you a view of the sector performance of the 11. Actually, in this view, let's take a look. And for those of you interested in digging in further, this is called novelinvestor.com. Also of note is that this year-to-date information only takes us to the end of October. So in the beginning of January, it will be updated to include the full year. You will want to take another look. But certainly for educational purposes, I feel this is absolutely plentiful as it relates to the information that's displayed. So first up, what we can see going into Q4 is that the top performing sectors, I'm highlighting them, and you will see that they were the bottom performers in 2022 for the most part, but also of note is that they are growth areas, and that is information technology, consumer discretionary, and telecommunication stocks, XLC. So what I also wanted to point out with this view that takes us back to 2008 is the fact that these growthier areas, despite having significant outperformance this year, historically, you can see them lead. So looking at information technology, for instance, and going back to 2017, 2019, and 2020, it was the top performing sector. So you can have multi-year outperformance in these growthier areas. And we can also take a look at TELS, telecom, also up there at the top, 2016 and 2019, by way of outperformance. In other words, from my work, I am anticipating continued outperformance in these growth areas with with AI and other new technologies coming into fruition to the point where they are really helping companies grow. And another area that I did want to highlight here is the fact that some of these underperformers, for instance, I shared with you that financial chart, FINL, going back 2016, 19, and 2021, you can see that if the backdrop is there, it can be an outperformer, even if it does not have those growth characteristics. One last area that I am on the lookout for to come back into play is XLV. Let's go ahead and take a look at a monthly chart of XLV, which is the healthcare ETF. And you can see that for the most part, it has definitely underperformed this year. Back and fill. What I am on the lookout for at some point is for this downtrend, longer term outlook, when you're looking at a monthly chart, to reverse with the black line up through the red. I believe that the growth in this area, or the advance in healthcare stocks, will come from a continuation rally in biotechs, and then also IHI, which is medical products. That's going to be your growthier area of healthcare, medical devices. And you can see also on this long-term view that we have underperformed going back to the beginning of the bear market into this year. And again, only recently are we seeing a pickup, and I anticipate growth and upside potential to continue in this area as well. And that's it for this week, everyone. I hope you have a fantastic New Year holiday. I'm going to look for you again here in the new year.